Hello, ladies and gentlemen. Welcome to this episode of Florida Real Estate News. Now, today we're going to go beyond Florida and just kind of give the real estate picture in general because we're going to cover Realtor.com's revised report for 2022. Now, normally the big guns like Zillow, Realtor.com, etc., when they do their annual report, it's just that, an annual report where they predict what they expect to see over the new fiscal year. However, this time they had to revise it. Why they have to revise it? Well, quite simply, and they say don't get political on these type programs because you alienate half your audience. I'm not going to get political per se, but I have to be frank. And the one keynote of this program is that we'll always be brutally honest with you and give you the lowdown. And frankly, the matter is, everyone knew that the current administration would be incompetent, but they did not know that it would be so unbelievably destructive as it is. So, inflation. They say it's at between 8%. I've heard as high as 9% on official reports. But when you go to get gas, you know that 8 or 9 really doesn't cut it. It's much higher than that. So inflation's out of control. And in an effort to curb that, the Fed raised the interest rate and, more importantly, are threatening to most likely do it again throughout this year. So it is this changing economic landscape which caused them to give a revised report. Now keep in mind when we do this revised report, when you go on these YouTube channels, basically everything that you click has explosions, talks about a crash, catastrophe. It's what we call clickbait. There's pictures of the people on the thumbnail are like, making all these terrible faces, and they want to scare you because fear is what promotes you to click on and watch the video, and that's what it's about. So we're going to take a balanced approach here. There is a change, but we have to see what this change actually means. Now here's where we have to learn to listen critically and read things and understand, get underneath the highlights and the headlines and really get to the meat of the matter. Now, what they'll report is they anticipate a 6.7% decline in home sales from 2021. Like, oh no, a 6.7 decline. Well, what does that really mean? Well, what it really means is that 2022 will be the second largest home selling year since 2007, only trailing behind 2021. 2021 was unprecedented, so 2022, while it lags behind 2021, is still unprecedented. We also have to avoid these words like crash. They like to say crash everywhere. Well, a crash is catastrophic. When you crash your car, it does an awful lot of damage to the car and unfortunately probably you. That's what a crash is. Now what we're seeing right now is actually a deceleration. Deceleration would be equivalent to you just taking your foot off the gas pedal, or not even taking it off, just coming back, throttling back a little bit. So you're not going full speed ahead. The market was out of control. So here's an even better example. I get emails from, this is not the article, these are just actual emails sent to me. And this is where we get local because, again, all real estate is local. So the national trends are one thing. You want to focus in on your area, your neighborhood. So yesterday at 7:25, I get an email and it says price drops, your update on Auburndale, Florida inside. So price drops, that's at 7:25. At 7:26, the email says homes in 33823, that's Auburndale, are selling 21 days faster than a year ago. And then at 8:32, so within an hour, I get another email, price increases in Auburndale, Florida. Prices are going up. Check out the latest price increases in your Auburndale search and move fast on the places you love. So, are they lying? No, they're not. But again, it's all perspective. So what's happening? Generally, the value of homes are still continuing to increase. All right, so the general price is increasing. However, because they're increasing, human greed is coming in, and people are way overstating what they think they can get for their house. So, a house that was worth, we'll make it really, and I'm going to give you an example. I'll give you example of my own neighborhood. House across the street sold for $340. It was only up for a day. It wasn't even a day, a couple hours. It sold. He didn't let any bidding go on. He just, first offer came in, sold it immediately. That's what he asked for. That's what he got. He could have gotten more. The value of that house was probably about $350. That same exact model in a different neighborhood nearby, someone's had that up for 400,000, and they've had it up for 2 months now. So what will happen? That person will eventually have to drop his price. So the headline will say, oh, people are dropping their prices. Well, they are dropping their prices because they've been overpricing them. They've been getting greedy and asking too much. So some of them are being forced to come back to reality and sell it at a more reasonable price, which a more reasonable price for that one that's 400,000 would probably be about 350, 360. That said, that 350, 360 is still a tremendous upgrade in equity over the past year. So the prices in general are still continuing to climb, but people are starting to drop their prices. So what I'm saying is it is still definitely a seller's market, but what's changing is now we're starting to get to play the game. The game this year so far has been a sprint to the finish line. Whoever can offer the highest, the fastest, wins the house. It's like a bidding war, and it's just crazy. It's 100% seller's market. This is now a negotiation, a poker play, but with the odds on favor of the house, which the house would be the one who's selling it. So is the market shifting? Yes, it's shifting, but is not yet crashing. What will cause a crash is basically these reports that keep predicting a crash, which become a self-fulfilling prophecy. People panic. Now, another reason that the housing market is still relatively strong is basically because the stock market is atrocious. It is crashing and crumbling around me. So that's not safe money. Because of inflation, holding on to your money is not safe money. So the safe money is in investments. Now, in Florida, most of what we'll be getting are cash buyers. So these rising interest rates don't really affect cash buyers because they're not borrowing. There's also people that have the wherewithal to realize that rates might go up, and they eventually come back down again. So it's not really a matter of timing the market. It's a matter of time in the market. That's what makes you a winner. The one that try to play the game too much, they become losers. So speaking of those who play the game, this is where Florida could get hurt. Even though Florida is a very popular destination and most people are moving here to live here, which is different than in 2008, which that bubble burst, a lot of what's going on are investors buying and holding property. So Florida still has one of the highest vacancy rates in the country, which is bizarre because what's happening is some investors were buying property and the equity goes up so fast that they're not even renting it. They are just holding it, waiting to sell at a higher price. Well, if this starts to shift, those guys will dump properties fast. And if they start dumping property fast, the same as people panic when a stock goes down and they just dump it. If they just see this deceleration and they panic and they let go, that will flood the market, and that will definitely cause a shift in the balance of supply and demand, and that's when you're going to start to see the prices dropping. Now, I also see, this isn't in a report, but with the builders, did the video last week. You can check it at the end. There'll be a link to it over KB Homes. Well, in addition to what they offered there, which was they waived the $12,000 premium lot fee. They locked in your rate for 360 days. There's probably a couple other things there. Now what they're doing, they actually dropped their price, or they gave it, I think, an incentive or however they phrase it. But basically, they dropped their price $20,000. Plus, they're putting $15,000 towards closing, which they usually did that anyway. That was a pretty standard thing for builders, or also towards buying down your interest rate. So that's a pretty good deal over there, but it shows that the home builders are starting to, I don't want to say panic, but it might be a good time to look at new construction again, where up until now I said, no, don't do it. So they're starting to see the crunch. And the same thing though, they also were crazy inflating their costs. Like, it was out of control, and it was a little, I don't want to say obnoxious. I mean, I am a capitalist, but it was out of control. So they're basically are being brought back to reality. That's what's happening. It's not crashing. We're just coming back to reality. All right, so I'll go over the raw numbers here, what they're actually expecting. So existing home median sale price appreciation. Originally, they're forecasting at 2.9%. Now they're looking for it to go up 6.6%. So that's what I was talking about. Yeah, people are dropping prices, but that value of the homes are still going up. The equity is still going up. Now, existing home sales, this is the interesting one. They originally expected that to be up 6.6%, but they now believe it to be down 6.7%. Now, that makes sense. Reason being is people, this is not builders. Builders are just building and want to sell. But people that are live in their home and they're going to have to move, they don't want to take on a new higher interest rate because a lot of them either had a lower mortgage or they refinanced, so they have a lower interest rate right now, and they're afraid of where would they go. They sell their house at a decent price, but they got to go buy one at a high price, and they also have a high mortgage. So they're not selling. So that's the flip side of the coin. I said the investors dump the properties, that's one thing, but generally people who own their homes, they're not putting them on the market. So that supply and demand is still making it a seller's market because people are afraid to sell. So forget the numbers. Let's get down to the advice, the reason you're tuning in, the things you want to know. You want to know the advice for home sellers or home buyers in 2022. Well, first let me address this whole idea of advice. Now there are three different ways you can ask a question. The first way is, what should I do? That might get you the answer you want, but a slightly better one would, what would you do? But I got one better than that. The very best one is, what are you doing? So what do I mean by that? If you have someone who you're going to ask for financial advice, who's an investor, especially if they get a percent and have an incentive to sell you something, don't just say, what should I do? Or what would you do? You want to know, hey, what are you doing? Like, what are you doing with your money? And I'll just copy that. So I'm going to tell you what I'm doing, not because I'm egocentric, but because it's really the best advice. What am I doing? I do expect prices to go up, but I expect a dip down. So what's going to happen? According to our numbers, there should be about a 15% increase in homes for sale on the market. I already purchased a home, so I'm locked in. I'm moving into New Smyrna. So I already locked in my interest rate. It's a new construction, and I have to sell my house before settlement. What I'm doing right now is I am selling sooner than later. Rather than competing with all the houses that they expect to come onto the market, I understand supply and demand, so I am selling now. Even though my price could go up, I don't feel like dealing with the aggravation. And in a cost benefits analysis, the waiting could be more detrimental than me going now. So I am making the choice. I am selling as soon as possible. I'll probably list next week. That said, if you are a buyer, it probably is a good time to start looking to buy. People will be putting more houses on the market. That gives you more competition and more opportunities, and it gives you, like I said earlier, a little more negotiating power. So that's what I would do, and that's what I am doing. So if you have any further questions on this, I try to make it not too long so you don't get bored. Just give me a call at 863-377-0037. That's 863-377-0037. I'm Ed Kisselback, and this is Florida Real Estate News.